All right, everyone. Well, thank you so much for attending our webinar today. I understand with current events, things are challenging and many people are seeking other ways of diversifying their portfolio, not keeping all their money just invested in the stock market because it can be volatile. So I just want to remind you here at NewView, we are not CPAs. We are not financial advisors. We are non-fiduciary. But what we do want to do is be able to educate our clients and potential clients on a variety of investment opportunities. So this is why we have invited Dr. Rich Gupta here today, to talk more about cryptocurrency and blockchain. And he's just going to give you an overall overview of investing in cryptocurrency. The way to do that with a self-directed IRA is by having checkbook control, which is something that I can go into more detail with you offline. So without further ado, I'm going to go ahead and introduce Rich Gupta to go ahead and take over. He has some great information, and you can always reach out to me, Ryan, personally afterwards to talk more about how you can invest in cryptocurrency using a self-directed IRA. All right, Rich, it's all yours.
Thank you very much, Brian. Thank you for joining. Good afternoon. My name is Rich Gupta. I am the CEO of TitanDX Exchange, otherwise known as TitanDX. Today's goal is to present cryptocurrency and a blockchain in an overall overview and education process. And I'll walk you through with a presentation. And Brian, can you go to the next slide? There we go. So we plan to cover pretty much the gamut of what cryptocurrencies are, how they act, and what's the marketplace, and what is the global overview, as well as what are the risks involved and what you should not do. Prior to doing that, just for a background, I spent 20+ years in various Wall Street firms and major firms in Manhattan, New York, from Prudential, Lehman, Morgan Stanley, and came out in 2005 in the West Coast to create a new company called Countrywide Alternative Investments. We structured the process and we ran our asset management platform. But obviously, we were impacted through the impact of 2007, 2008 of market crash. Since then, have evolved into different transactions, different processes, as well as running and managing different advisory / asset management platforms and advising clients and managing assets. And landed into cryptocurrency world around 2014, 2015 timeframe, and started dabbling into, we will discuss much more about what cryptocurrencies are and how they work all through the process of this education. And I will ask Brian to hold off the questions till the end. I will entertain every questions you guys have as a participant. I think you have a dashboard to write your question down and you can submit those questions as we speak. And Brian will read out the questions and I will answer those questions as they are relevant to the topic today. Or if they're not, we will still try to address them as much as I can in educational framework. With that, can we go to the next page? So the first, I guess we need to talk through, since I'm also a FINRA registered person, I need to make sure that you all understand that this is nothing but an education process where I am, or Brian at this call is not trying to sell anything. Whatever I may say could be forward-looking statement. This is not a process for solicitation of any product. Obviously, this whole material is in front of you. You can read it, but I must state this is not an offering. This is not an attempt to sell. This is not an advice to buy. And this is not instruction to open any account anywhere. Next slide, please. So as a beginning, a lot of folks are confused as to what is blockchain and why should they pay attention to and what should happen and why should they not. Our whole goal is to promote this technology, obviously. And what does this technology do is the benefit of the technology is similar to what I like to give example of what happened to internet, early days of internet from 95 to 2002. Massive processes were implemented and enhanced and changed. All that happened, and now we don't even think about when we go to internet, either through emails or looking for Google Word or anything. So what is the benefit of blockchain? Why should you use it? Blockchain is the beauty is basically a blocks of data, which is fragmented and distributed so nobody can hack it. And it's a chain of undivided data framework, which moves through in a simplest term, and it updates all the time. In a simplest term, if you have used Excel spreadsheet, it is similar to creating an Excel spreadsheet and reformatting and re-updating every time when the data is updated. So every 10-second block of data gets inputted and updated. I don't want to bore you with the details of blockchain, but that should give you some information as to what blockchain is: immutable, is distributed, and it is the data in fragments. So no one person can go in and hack your data or get all the information. If they do hack it, they will only get portion of data, which could be very meaningless. And that shows up in the next slide. So the beauty of this, I already talked about this whole blockchain, and it's just another view of what the blockchain can look like, and why is blockchain more adaptable now of new technology, and what blockchain as a database does. Have you probably heard about all the hacks which has happened? The biggest one was started with the Target. Then you heard about insurance company getting hacked. Then you also heard about the credit data providers getting hacked. So all that could be replaced with the data being stored on the blockchain. So blockchain is not a panacea. It's also being developed as we speak. And the speed is one of the biggest challenge for blockchain data storage and data transmission. So that's moving through the process. A new generation of products will be created and is being created as we move through. Next slide, please. So this is a picture of what is a centralized database. On the left, which you're seeing on your screen, is basically every data comes to a central point and stored there. Then we heard about decentralized databases, and that's where all the data was decentralized and segregated. And now we have a distributed database, and you can see on the third slide, on the third section, or third column, where the data is pretty much fragmented and distributed. So there's no benefit for hackers. This is a new generation of data being created and being talked about. So this is what the beauty of the blockchain is, and why blockchain is becoming more live stream, more into regular processes. The question could be asked, where would the blockchain be used? So the one question could be answered very easily is wherever there is a database, blockchain could be utilized in a distributed and fragmented manufacturing. The question would have to be asked as to why is blockchain being inserted, why new technology coming in, and always as a user of the data, you have to figure out what is the benefit, what is the reward, versus what's the expenses. And all that will be factored in to calculation of data storage, data security, and that's why the beauty of blockchain comes into play. What industries are using? Obviously, the new industry, cryptocurrencies are using it. Anything to do with the supply chain management has a huge application, block data. A lot of folks are using into medicine discovery and application thereof. People have also used this into medical delivery systems where the data has to be protected, or anywhere there's a coordination being utilized in product development and process enhancements. Folks are using blockchain to improve their data storage, data security, and participation. Enough of blockchain. What are the applications? I'll talk about now where the applications are happening through this conversation, mostly in cryptocurrencies. And there are other applications we can discuss for hours, and it will take more seminars to do. But today's focus is strictly on cryptocurrency and why they have become so popular, why everybody wants to learn about Bitcoin, Ethereum, Ripple, or other stable coin, or there's 2,000 other coins which people have populated, and why should you participate in, or why should you at least look at to learn what's the benefit of it. So the biggest of all is Bitcoin. Bitcoin came out, started by a so-called fellow, which nobody knows who that is, Satoshi Nakamoto, and started in 2010 timeframe, right after the 2008 market crash. And his philosophy, or that person's philosophy, was that we can create something which is not centralized, which is not controlled by any government, which could be independently traded, and it could be science and data driven. So the Bitcoin, the benefit of Bitcoin is a limited quantity by technology. So it will only stay at 21 million of issuance at the most. And so far, about 19 million have been issued. And how the Bitcoin gets issued is different topic, but I can cover that in very briefly. It's called mining process. People have set up their servers and computing devices where they are computing and solving for an algorithm, and it's all not probability theory. It's a randomized theory. More you solve, more you better get rewarded. And it's called Bitcoin reward system. So when you mine, you use the resources to mine, and for that you get rewarded. And every so many years, it started with the 50 rewards of mining. Then it got half to 25. It was half to 12 and a half coins per reward. And currently is supposed to go live anytime in May, the next halving schedule, which will be 6 1/4 coin, 12 and a half to 6 1/4, starting sometime in May. So the new miners who are setting up their mining process through equipments or server farms. I mean, in old days when 2010 started, you say old days, I mean, that was like just a few years ago. The people were mining Bitcoin with just their laptops. But today, people are mining these assets through massive server farms, massive calculating devices to come up and mine. And the beauty is, miners do get benefit of that. There's a continuous profit on the block transaction, plus you get rewarded as a miner from now on, starting May, I don't know, May 20th, May 15th. Nobody has that exact projections, but based on the calculation of the power being utilized and the power of what Bitcoin had been massed out, is sometime between 15th to 20th May, it will start to have, and the new reward will be 6 1/4. The next coin I'd like to talk about is Ethereum. No, stay on that page, please. Ethereum is another technology came out. It's called smart contract. So you build the blockchain. How do you put anything on a blockchain? You can't just take a PDF copy of your existing contract and put it on as a process to put it on to say you have this blockchain solution. No. So that will basically be some kind of centralized, decentralized database process. But on the blockchain, how about create a smart contract which meets the need of regular contract, which could be enforced in the contract laws? And that's what Ethereum did. Around 2000, I would say 12, 13 timeframe, and that's where the explosion of the market happened with the smart contracts. And I will discuss the ICO, initial coin offering, down the road. That created a new wave of cryptocurrency. And the third currency I like to talk about is called Ripple. Ripple is a interbank money transfer technology. Instead of transferring funds through FedWire and bank to bank, you can transfer Ripple coin, and Ripple coin could be converted into US dollar, or you can use Ripple technology to create interbank transfer system which is much efficient, is built on a blockchain, obviously is immutable, and it cannot be hacked in. As such, as Ripple has gotten a lot more attention. Then the next coin I'd like to talk about is stable coins. Stable coins is a new generation of coins that are coming on in the marketplace. That means is they're backed by something. Either it could be based on dollar, it could be backed by gold, it could be backed by an asset. There's a new transaction coming in I'll talk about next called stablecoin. And for that, let's move to next tab, Brian. So this is where I started talking about other coins, which is STOs, IEOs, and you probably heard a lot about Libra or Calibra, but let's take one at a time. STOs are called securitized token offerings. So a lot of folks have assets, either they have a mine or they have a real estate. They want to have a partial distribution of real estate. So let's take one example for securitized token offering. You're an owner of a hotel property or a bunch of apartment buildings. How do you get funded? In current environment, you go to your bank or you go to an institution, they fund you. In STO market, which you can popularize to accredited and non-accredited investors, and you can create those assets by securitizing the asset, partial or full, and tokenizing it, and then offering that to investing community. And similar to that is IEOs, initial exchange offering, and same concept. You can have a company, you can have asset, which could be securitized and tokenized and offered as an exchange offering. I want to spend a couple of minutes more on Libra, Calibra. You probably all read about Facebook launched a product called Libra, and their wallet was Calibra, which could be used. And there was a stable coin based on basket of currencies, US dollar, euro, maybe Japanese yen, perhaps RMB. That product came out, and Facebook as a whole faced a lot of challenges on that because of the issues of Facebook. If it was somebody, different entity could have originated Calibra, Libra, it probably would have seen a daylight, much more higher daylight than Facebook did. Facebook was under a microscope of federal regulations for privacy and data protection, and they have utterly failed in earlier days. But since then, Brian, please stay on that page. And so Libra, Calibra had to be literally, most of their participants have come out of it, and we can get to the next page now. So what is the regulatory environment? Why this thing is taking so slow and so high to get on? So right now, SEC has come on board earlier last year. So is BTC and ETH. BTC is Bitcoin, ETH is Ethereum, and CFTC also has a mandate and regulatory involvement with that. So is globally, there's impacts going on for regulation where the global bodies are also looking at, I show example of FCA, where they have tokenized it and how they are putting regulation. SEC's view is anything we are securitizing as a token, it should be treated similar to what we do for any underwriting or any primary issuance of stock, bonds, or mutual funds. So that's the view being populated, and that's the view STOs, IEOs are following in the marketplace. Next slide, please. So with that, what is my final thoughts? Let's go to the next slide, and I talk through where we are. I mean, so right now you have pretty good understanding, and I've gone through, because these educational webinars are only limited for time. So I've talked through where the market of the blockchain has come through, where Bitcoin has come through. And I chose Bitcoin, Ethereum, and Ripple to talk about only where the industry is heading, not because I like them. I don't have a personal view on either one of the coins I talked about. And I talked about stable coin because there are new generations of coins coming on, as well as talked about where the IOs and STOs are coming on using blockchain technology, which we spent quite a bit of time in the early conversation. So where are we? So since this is an analogy This was created by a team of people which I have participated and taken out of as to this show the example of where internet started and where internet has been. And we need to update that through, this was done a few years back to show where blockchain and crypto assets are. So this is where we say where we are is the internet equivalent where internet started back in, I talked about 95, 2002, but that was the height of internet growth. But look where we are today. We are at the very early stage of where blockchain is and where cryptocurrencies are. There's a lot of growth going to come through, a lot of new technologies going to come through, and a lot of also product will come through. So beware, and the opportunities are amazing. Opportunity on the blockchain and crypto assets are amazing. But word of caution is beware, know what you're doing, take a smaller, and this is where I get into a advice slash education. My word of wisdom is watch what you're doing, don't do too much, just do a small scale, learn the language, learn the educational process of blockchain, see where the value proposition is, and see how things are moving in the marketplace. So next slide, please. So now, where are the opportunities and where are the risks, right? So I discussed that in the earlier slide as well, but let's spend at least a minute or two. So where are the big technology development? There will be companies who will come out with distributed ledger technologies. Obviously, IBM has a Hyperledger, Ethereum has a, obviously, Ethereum product to do, and there's other companies who are coming out with their blockchain technologies. Pay attention to those and you will learn. And on currency, cryptocurrencies, there's a tremendous amount of growth has to happen. Obviously, there's a lot of landmine in the crypto world as well. So I will show you a couple of examples of which I talked about earlier on the ICO world, initial coin offering world. And that just went boom and bust around 2015 to 2017 timeframe. And I'll discuss that in a couple of seconds. But either path is amazing for investors' outcome, but my word is a caution word as to these markets are very volatile. I mean, every time there's a halving in the Bitcoin environment, especially on the Bitcoin environment, there's a parabolic move on the pricing of the Bitcoin itself because people are afraid that they may not be able to access any. And then some reality comes in. So it has gone through maximum waves of explosion, contraction, explosion, contraction. If you just Google up Bitcoin pricing for last decade, and I mean, there's a lot of analysis out there. I don't have to show the charts. It may look like I'm selling it. I don't want to sell it, but I want to forewarn you, just watch what your entry points are and what your exits are and what your time horizon is. If your time horizon is for longer term, I would suggest dabble into it at your own risk and understand what the processes are. And these products are extremely, extremely volatile. Next, please. Brian, next slide, please. And then now let's discuss that the ICO, which I mentioned before, is more as education at this point than where the markets are heading. As originally, we went through in 2002 explosion of internet market and MarketScape, and all those internet companies went to boom to bust. And same thing is going to happen with this new technology of blockchain, but be aware of where you want to be participating in. So the last word of caution would be is look at what's happened to ICOs. ICOs were done from, it's called initial coin offering. So folks were creating their coins using Ethereum ERC20 token offerings, and ERC20 is their known product, which was used as a smart contract. And it was used to create product pretty much in a space where three guys were preparing a white paper, and white paper pretty much was the prospectus slash PPM. which will disclose what their intentions are, what they want to do, and they will create a product, and obviously the product will offer them return. About 90 plus, very high percentage in 90s. I will venture to guess about 98, 97%. I've absolutely, those ICO went to boom to bust. A lot of funds have been lost. A lot of technologies will come out of that, but investment capacity had been destroyed in that space. In early stage, people did not follow any regulatory framework as well. Nobody had any supervision. SEC came out around 2018, 2019 to provide guidance, but there were lawyers and advisors who were promoting these tokens as a new way of raising capital. Obviously, my word is every time you hear a new way of raising capital, ask the fundamental question, those three questions which have to be asked. Is it profitable venture? Is it the money being used to create profitable venture? And am I, as a recipient or provider of capital, are expecting to return or receive some return? It has to be those three. And if those three things says yes, 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 then it's nothing but a security transaction, and folks should be following securities laws. But a lot of folks did not follow. Globally, it's not just a US problem. Globally, this thing happened, and majority of the ICOs have busted. And I will show you in a couple of charts where the landmines were and how people did not pay attention to. Brian, next slide, please. And this will show you how the ICOs, couple of ICOs I have shown where they went from the top to the bottom in a very, very short time. It took maybe less than 18 months to basically tank away. And next one, please. And I think this is the last chart. Yes, so what I would say at this point, we have discussed pretty much the elements of the new technology, blockchain and crypto assets, where I will leave you with a couple of thoughts if you want to educate yourself more. There's a very good website I have pointed out called CoinMarketCap, where you will see the list of hundreds of tokens offered, is still operating, and you can see all the background. And I'm a big proponent of these two books, one by Bill Mogayer for Business Blockchain, Promise Practice. This is more academic book, and if you're into that, great. The other book with Don and Alex Tapscott, their book is more easy read and more relevant if you're not into academic style, into blockchain revolution. And those two books, I use them also as my book material. The last fall class I taught at MBA class at CLU, Cal Lutheran University in Thousand Oaks, California. With that, I will say thank you very much for participating. And Brian, if we have any questions, perhaps this is the time.
Okay, yes, we do have a question. What does immutable mean?
So immutable is the word means is you cannot override it. So in a blockchain technology, if you want to, in a database, you can override the database by writing a new language or override the database. Immutable is whenever you have put any data on a blockchain, you cannot just override it. You have to run a new block and new acceptance. So data becomes immutable once the data has gone through the block and has been accepted by the participants of the blockchain. In Bitcoin transaction are the miners who are giving confirmation of the transaction being confirmed on. So that's that.
Okay, we have another question. I guess this was more applied towards me. How can cryptocurrencies work within a self-directed IRA? That's a great question. So when you have it in a self-directed IRA, you would have to create a checkbook control LLC. Once it's in that checkbook control LLC, you have a bank account, a business checking account associated with that LLC. And instead of your funds sitting here with NewView, they would be sitting in that checking account where you can then control that money to purchase your crypto within a wallet. So that's how it would work within a self-directed IRA. Does that answer your question?
I see some of people are trying to chat with me. I don't have a capacity. If you have a question, you can ask that to the question, and then perhaps Brian can point that question out to me and I can answer it.
I have the next question for you. Do you recommend any exchange or wallets?
Well, that's a question which often comes out. I would say when you look at exchange, look at their adaptability, their service. Obviously, in US, the biggest one is Coinbase. I personally have my own account there as well. Bittrex, or people have used Binance a lot. I wouldn't recommend either one. I would say do your own due diligence, and any one of those three are as good as anyone. But be aware that their customer services are not as good as you're used to dealing with your banks or local trading platforms. So most of these exchanges behave and act electronically. They don't have as much of support system as the regular trading platforms or banking system has. So, I mean, choose which one you want to choose. And on the personal wallet side of the question, there's a host of products out there. I don't like to talk anyone. It could be construed I'm recommending anything. So I would say do your due diligence and figure out why do you need to have personal wallet. There's a risk attached with that. You may have a personal wallet and you lose your private key and whatnot. So in the opening account at Exchange as well, you will have your private keys, but Exchange has your public key, so at least you're protected that way. But if you're not going to trade in multi-million dollar transactions, uh, worry about private wallets less. But if you do plan to trade in multi-million dollars, then there's a couple of platforms coming up where there are depository institutions coming up. You have Fidelity open up a depository. So is BACT, B-A-K-T. So is BitGo, who has come up with a public processes, a depository. Uh, I used to be very big favorite on using a private wallet, but now these institutions have come up with massive resources behind it. So we don't have to worry about as much as we used to. I hope I answered the question.
I have another question here. Says China is trying a digital currency. Do you expect the Fed to experiment with a digital currency?
That question has always come up whenever we address these questions. The tokenization of US dollar is already exists because most of the US dollar could be traded through the US channels of bank to bank, or you can argue the process is not clean. The banking system is still stuck on 1980s or earlier platforms, and they're not speeding transactions. You can't get your money transferred within seconds. It takes days or hours. So that is being talked about. Yes, US Federal Reserve has announced the digitization process. Whether we will ever need a US digital dollar, who knows? Other side of each currency of Chinese RMB, they are more focused on creating because they want to popularize RMB globally. The question would be is why would people want to use that and what's the benefit of it? And if people will use only because of security and stability of currency, then probably, and same thing with RMB. I mean, within China, most of the folks are using electronic way of doing businesses. I'm obviously very biased against US dollar, and I'm very negative on RMB usage. So I don't see much going through. The question would be is the trust and the security of the asset which you're buying and keeping. So US dollar always wins on that. But efficiency is definitely a challenge on the banking system, which I believe Federal Reserve has task force out there looking at it. I mean, right now, ACH transfers happen within like a couple of hours. Why not a couple of seconds? Why not immediately? And that's what has to happen ACH wise, which ACH is electronic transfer of funds interbanks, and FedWire is intrabanks as well. It will happen, but digitization of US dollar has been discussed and talked, but we don't see any movement coming from US Treasury yet. And the value, I don't see the value of it yet.
There's another question. Any more details or guidelines on creating a crypto-friendly IRA? That one we can take offline.
Yeah, that's your question, Brian.
Yeah, that's more geared towards me, but we can talk about that one-on-one. Self-Directed IRA is crypto-friendly. It's your decision whether what type of crypto you want to purchase and where you want to store that. That's completely your decision. Remember that, NewView is non-fiduciary, so all we are is the custodian that allows you to hold alternative assets.
Yeah, I mean, I can plug myself here. TitanDX is an OTC trading desk, and we have exchange. We currently do not have any business relationship with NewView and Brian and Co. We hope down the road, after these seminars, we will build some relationship, but currently we do not have. That's also a disclaimer.
Yep, and there's always new options that are evolving, especially because it's so new. And then eventually it will get easier where, we might be able to have a platform where it's almost like a brokerage and you can buy your crypto via that conduit. Yeah. It's something that we're going to be working on in the future. Just like I said, crypto is pretty new. So, as it takes off, we'll be evolving along with it.
Yes.
One more question says, why hasn't Backit taken off?
Well, I mean, backed depends how you define taken off. Backed is not a, how do I say it? It's institutional platform, number one. Number two, Backed is also learning and creating their platform. So it took them about a year and a half to develop the technology solution to put it out there. They are not a day-to-day user-friendly crypto exchange, but more designed for institutions, and institutions are starting to use it. And I would say taken off has a different meaning to different people, but I would say they are playing some role in this marketplace.
Okay, this will be the last question. Why did Poloniex decide to withdraw from U.S. investor market, and what is the IRA stance on capital gains in cryptocurrencies for U.S. investors?
I don't know why would any, I mean, obviously, I kind of know why they got out, so I won't get into that, but I can tell you on the second part of the question, on the capital gain side, is pretty much IRS has ruled any crypto gains similar to any other asset transactions. The last count was where it's still, they're treating when you move coin from Bitcoin to Ripple, or Ripple to ETH, or ETH to stable coin, they treat those events as a independent buy and sale events, and each one should be counted and reported under the timeline of 1 year or more than 1 year of holding. So if you held a coin, say Bitcoin, for a month, and then you transfer or sold the Bitcoin to buy ETH, Ethereum, that would be construed as a short-term gain or loss. And then you took the ETH within the same year and bought Ripple, that could also be construed as a short-term gain or loss. And then you took the Ripple and you held it for a Ripple for a year and did a, again, buyback of BTC. That could be construed as a long-term gain for Ripple, and then new transaction for Bitcoin. So that's still, I mean, there's US laws as a whole and the global laws as a whole are still catching up to the environment of trading on cryptos, which people are trading daily. But this thing still is out there.
Fantastic, Rich. Thank you so much for your time today. The last question that I did see applies to me. is there a fair market value evaluation basically due for cryptocurrency? So like I mentioned before, crypto is held in an LLC. In the LLC, yes, annually we will need to know what the fair market value of that LLC is worth. So if you are holding any cryptocurrency in that LLC, that would have to be part of the value of the asset, which is the LLC. So yes, there would be a fair market valuation that's due annually for that crypto. If there are any other questions, you're more than welcome to call us today. The phone number is on the screen, and I can answer those questions one-on-one for you.
Awesome. Thank you very much, all. And thank you, Brian, for setting this up.
Okay. Thanks a lot, Rich. I appreciate your time today. Have a wonderful day. Stay safe, everyone out there.
Thank you. Bye-bye.